Hey all. Okay, welcome back to another video. We're going to talk today about secured and unsecured debt. We're going to talk about some definitions so that way we understand what we talk about when we are defining other things in the financial sector. All right, so collateral is one of the first things that we want to talk about when we're talking about secure and unsecured debt. It's something that needs to be given in the event that the borrower does not pay the amount that they asked to borrow. Default means that the borrower stopped making the payments on that debt. An asset is something of value that can be used as collateral to secure a loan. It's something that you own or that is owed to you that provides current or future economic benefit. It can include things like real estate, jewelry, cash, as well as non-physical assets like stocks and intellectual properties, or even money in a savings account. The main difference between secured and unsecured debt is whether someone puts collateral up or not. So secured debt, the borrower puts up an asset as collateral for the loan. If the borrower doesn't pay, then the lender can take the collateral for themselves. Examples of secured debt is mortgages, auto loans, home equity loans, and home equity lines of credit. Unsecured debt is when the borrower doesn't put anything up to get the loan. Instead, the lender issues funds based on the borrower's creditworthiness or their promise to repay. Examples of unsecured debt include personal loans, credit cards, student loans, and medical loans. So because unsecured debt is riskier for lenders, it's usually at a higher interest rate and has stricter eligibility requirements than a secured loan. Because with a secured loan, obviously they're just like, oh, you don't want to pay? Fine, I'll take it. I'll repo your car, your house, etc., etc. So let's talk about secured credit cards. If you don't know what a secured credit card, we already talked about the basics of what the definition of having a secured loan is. We're just going to go on. It's a credit card that requires a refundable security deposit on the open account. The deposit acts as collateral for the card issuer, and the bank will only use it if the card holder falls behind on the payments. So a secured credit card can be good options for those who are building or rebuilding their credit, or who have little to no credit history. The deposit is usually equal to the credit limit. So let's say, for example, you want to do a secured credit card for $500, you have to put in the $500. That's refundable back to you once everything is, nice, good and done, but it does not go towards your payments, which we'll talk about a little bit right now. So usually the deposit is equal to the credit limit, and the minimum deposits are usually about $200. The deposit is not used to pay the account balance, not at all, not once. That's just the collateral. Just in case you don't pay, they keep that money, right? And the charges appear on a monthly statement, just like a regular credit card. If the card holder, makes on-time payments and keeps their credit utilization low to zero, and I would always suggest paying it to zero, paying it off every single month, using it like a debit card, right? So you spend $5, go home and pay the $5, or use your, online bill pay, whatever, pay those $5 immediately. And their credit score can improve over time because what they're doing is they're constantly sending to the credit unions. Good job, ma'am. They're sending to TransUnion is what I was trying to say, and Equifax and so on, that you're paying regularly and on time, that you're not late and so on. And that's really good for you. The deposit is refunded when the account is closed and in good standing. How long is it going to take for your credit score to go up? Well, building credit can feel daunting, especially if you're starting with little to no credit history. A secured credit card is one of the most valuable tools for this journey. It usually takes about 6 to 12 months of responsible usage to begin to be noticed and have your credit improve. Again, zero utilization is something that I would say is extremely important, but if you're going to use it, pay it off. Pay it off, pay it off, pay it off. It's very important. Because this is a way to help build credit, there's no minimum credit score to get a secured credit card. You will need to pay attention to see if you are getting one that does have a fee, because some of them do have fees. Don't get the ones that have fees. They have a lot of places that offer secured credit cards to help you build your credit that don't have a fee. And some of those are Discover, Bank of America, Capital One, Navy Fed, and most credit unions. Go ahead, read the small print, make sure that you're not paying any fees, because otherwise it's costing you money and that's absolutely unnecessary. Can you be denied for a secured credit card? Unfortunately, yes. It can be for various reasons, but I'm going to name just a couple. If you're currently going through bankruptcy or you've previously had charge-offs on credit accounts or have missed a lot of credit card payments, then yeah, you're going to definitely be denied. If you don't have an account, a bank account to get money from so they can keep your collateral, you're not going to be able to be approved because they need some form of a way to get your collateral. Or if you can't cover the security deposit, if their minimum is $200 and you do not have $200, then they're not going to do it. Lenders are required to check your ability to pay. So before opening a credit line, they will probably check to see if you have a job. If you do not currently have a job and show that you can pay it, they're not going to approve you either. If you don't have the income to earn enough to cover the monthly bill as well, they will deny your application. Can you do anything if you are denied? Absolutely. Number one, I know it sounds really dumb, but it's something that it's hard for some people. Start paying your bills on time. Automate everything. I know that I say that, start paying your bills on time. Some people are really busy. Even people that have a ton of money and have a ton of money in savings and stocks and all that kind of, sometimes they forget and it's not automated. And so they get lates and it affects their credit and they no longer are able to get what they want because they forget to pay these bills on time. So start making a conscious effort to make everything automated. Even if it's just automating the minimum payment, that's also to prevent you having any lates on your credit. You can become an authorized user. That's another way that you can try to see if it works. I'd be very careful with this one. If you know someone with good credit, they might be willing to add you to their credit card as an authorized user. This means that you get your own credit card in your name. And what I suggest in this case is to have them keep the card, and all the positive activity that they do on their card also affects your credit. But on the flip side, if anything negative happens with their credit on that credit card, like missed payments or maxing out the card, it will negatively affect your credit and your ability to try to raise your credit score so that way you can get, your approval. There's another option is consider a credit building loan. A credit building loan works a little differently than other types of loans do. Instead of receiving money up front, the lender puts it into a savings account for you, and then you make payments every month. The lender reports your account activity to the credit bureaus, and once you've made all the payments on time, you'll get access to the money in the savings account. Keeping in mind that there may be fees associated with the credit builder loan for sure. A credit builder loan won't help you build credit if you miss any payments or you pay late. It actually is super detrimental, so you don't want to do that. If you make any late payments or miss a payment altogether, your lender will likely report it to the bureaus and it will hurt your score and you probably won't get approved for other types of credit. So checking your credit report is also really important. It can also help you stay on top of it. So if you go to annualcreditreport.com to learn how you can get free copies of your credit reports from all three major credit bureaus, I believe you can get your credit pulled from here, from that website, once every single year. And anyone that checks your credit for anything is required by law to give you a copy. So always ask for a copy. Get it sent to your phone, get it sent to your email, whatever. And if they don't do it, just ask for them. Ask for it. They're required by law to give it to you. So that's it for this video. Hope you liked it. Until next time. Bye.